Welcome to the Stock Market Daily News Podcast. Today is December 2nd, 2025, and I'm here to catch you up on everything that moved markets to start the month. Wall Street's rally hit the brakes as December opened with red across major indexes. The S&P 500 slipped 0.5%, the Dow Jones lost nearly 1%, and the Nasdaq dropped 0.4% by the closing bell. After last week's bullish momentum, are we in for a post-holiday market hangover? Let's dive into what drove the day, plus the trends every investor needs to know. First up, December started with a slide after 5 days of gains. Monday's dip took the S&P 500 back to around 4,580. The Dow closed below 36,000, and the Nasdaq settled near 14,300. Losses were led by defensive sectors like utilities, usually a safe haven, suggesting broad caution. Analysts point to a post-Thanksgiving hangover, with last week's rally setting up a choppy start to the month. But December still has a strong historical track record, especially in post-election years, so volatility doesn't rule out a year-end bounce. Next, cross-asset volatility is back in focus. A sharp rally in November touched nearly every asset class: stocks, bonds, commodities, and crypto. But now markets look to the Federal Reserve for direction, with hopes for a rate cut in December driving risk-on sentiment. Gold and silver moved higher as traders sought safety, while leveraged bearish trades on the S&P 500 have lost more than 80% this year. Lesson for investors: don't fight the Fed, and don't fight the AI trend, according to strategists at Barclays. Speaking of AI, KLA Corporation has become a standout in the semiconductor sector. CLAC closed yesterday at about $1,175, up more than 86% over the past 52 weeks, beating the broader semiconductor ETF and well ahead of its main rival, Applied Materials. Recent bullish analyst upgrades and strong quarterly earnings have driven momentum. For investors watching chipmakers, CLAC's outperformance highlights the wide range of outcomes even within hot tech sectors. In India, markets are consolidating as easy valuation gains fade, according to Devarsh Vakil from HDFC Securities. The next leg could be earnings-driven, with financials and auto stocks leading the way thanks to GST tax reforms and rising loan growth. Valuations for mid and small caps have cooled, offering selective opportunities for patient investors. The key message, quality, not just momentum, might drive the next move higher. Finally, for those seeking simplicity and resilience, analysts recommend broad-based S&P 500 ETFs. History shows that while individual stock picking is tough, low-cost market tracking can deliver strong performance over the long haul. For new investors feeling overwhelmed, this is a reminder that, sometimes, straightforward beats complex. Let's recap. The S&P 500 closed yesterday at around 4,580, the Dow near 35,900, and the Nasdaq just above 14,300. Key takeaway: after a November surge, markets enter December on a cautious note, but with opportunities emerging in selective sectors and quality names. Keep an eye on upcoming economic data and the next Fed meeting for potential catalysts. If you found this roundup helpful, make sure to subscribe and join us tomorrow for your essential daily market update.